Hey, good people. How you doing? Welcome back to Stock Up with Larry Jones. Go ahead, hit that like, subscribe, and that notification bell. If you're not getting these notifications, then your notification bell is not checked for all. All right, come and join a family of learners and earners. Let's talk about what's happening in this market. And then I'm going to bounce off of yesterday's video where I asked the question, are we near the bottom? Okay, so I'm going to just go through and we'll talk about that at the end. Let's get right into it. Don't forget, come join the money movers. We'll talk about that later too. Let's get into it. Stock market today, Dow, S&P, and the Nasdaq all rise as AI worries recede. Okay, so the Fed minutes came out. All right, we're going to go over that. Fed minutes released. Okay, we're going to go over that also. I just want you to know, just like I forestated, that yes, we were in an AI bubble, but that does not mean that the AI run is over. I personally believe we have until 2030 until things cool off. This is not the same thing as the dot-com bubble. They are building out infrastructures. You're talking from $700 to $800 million that these hyperscalers are spending, their capex, all right? And these software companies that's been getting beat down are now starting to find some footing, okay? So that's what we are looking at. Wait, is the fall over? That's not what I'm saying. We just look and we just search for opportunity. Let's see what else is going on, right? Let's see what the indices are right now. We could see that the Nasdaq is up 124 points, the S&P at 23 points. We still have 2 hours before the market close as I shoot this. But as you could see, it started here, ran all the way up, and then is cooling off towards close. So by the time you see this, anything could happen. So we could see the rise and the fall of the Nasdaq right here, okay? So a lot of your software companies are in this Nasdaq. And for those of you that are new, that goes for the QQQ also, right? So we could see the rise and the cool off, right? Now, this is the release from the Fed minutes, and this is there is some room for concern in these Fed minutes. At first, if you really look at it, it looks like good news, but it's some alarming news in here, and the market could react to this in a negative way later or a positive way, but there's room for concern in here. I want you guys to read, and we'll see what the market yields from this. Federal Reserve meeting released on February 18, 2026, which is this one, show officials generally favored pausing interest rate cuts. Right? That was expected. That was already priced in. That was already priced in, good people. So that's a nothing burger. But let's keep reading. All right. With some suggesting further cuts are only appropriate in inflation declines further. Okay. Only if inflation declines further, then we could do the rate cuts, which is, we already know that. Right? While the vast majority agree that the job market is stable, they signal no immediate rush to lower rates. That's kind of priced in, with some even open to hikes if inflation stays high. This is where the concern is, okay? Some open to hikes. That's where we have concern. Right? And then you can read the key takeaways from here, right? Inflation focus, economic outlook, rate path. But this says it all. This opening statement says it all about the Fed meetings. So you could see that it's kind of a split house amongst the Fed. And we want to see what this market wants to say about that, right? So that's why I believe we're cooling off until close, right? So we had this run up and we're cooling off right up until close. Now it seems like we're getting a little bounce here, but we had good information coming out. We had housing and all of that, and now we're cooling off, right? So I just say there's room for concern to see what this market is going to say about the Fed release, which is everything. Now, what's the next thing? The next thing is Nvidia's earnings. There's a lot weighing on Nvidia's earnings, and when we get Nvidia's earnings, we will know a lot. Also, this coming Friday, we have a PCE numbers coming out, inflation data coming out. PCE, which is one of the Fed's preferred gauges, PCE, that's coming out this Friday, all right, an hour before the market opens. So we're going to see how that affects the market. Now, before I close and show you guys what we were talking about on yesterday and why I made the video I did on yesterday, I want you guys to see some of the things that we partook on this morning as we made money. So this is the SPY. We called the SPY. I give these levels before we trade. I called the SPY to 689.26. And bing, it hit. And what guided us? The traffic trader. The traffic trader guided us right to our profit and took money, right? Then I said the Qs were going up to 609 after opening bell, and we started going up. It hit my level here, it hit my level here, and the traffic trader guided us there. Tesla, same thing. We went from here to here, hit my level right on the head. Amazon is one of the ones I got into. We called it, got in right here, took us here, and then it took us all the way up here, hit twice. And now, as you could see, just like a magnet, it's coming right down to this level. So you could have did a call and a put. We had fun making money this morning, right? One of the things that I did, I just have one share here of Amazon. It was cheap, as you could see, only $54, but 94.5%. So generally, for instance, I usually do at my earning level about $1,000, sometimes $2,000. So if I put $1,000 in here, that'd be 940, all right? And so if I put 2,000, it'd be about 17,000. Okay, I'm sorry. It'd be 940, right? 99 is 18, so it'd be about $1,900 just on this one play, as we made 94% live in front of everybody, so everybody could eat. So come and join us. Money Moves is going to be the top link below. We are earning and learning. And so how did we learn this? What helped us? What helped guide us? I'm going to keep showing you guys. The traffic trader, it guided us right to the money, and then it told us when to get out, and then we could have did a reversal and come down. Now let's talk about what I talked about on yesterday. I asked the question, are we near the bottom? And I pointed to some information, and my answer to you is we don't know. So even though it seems like I timed the market perfectly, I did not. I want to be crystal clear. I did not time the market perfectly. But what I did do was I went here, like I showed you guys, and the only reason why I went to VOO because this would mess up my charting on the other. The VOO is the S&P 500, and I just went to the 2-day 50 EMA. Why? I was trying to find an EMA, exponential moving average, that it just touched and bounced off of. And so I showed you guys on yesterday where we had these bounces on the 2-day and the 50 EMA. Touched here, it bounced. Dipped beneath here, touched here, it bounced. Dipped beneath here. So what makes this different? This was Liberation Day, all right? But touched here, it bounced. And then on yesterday, I showed you guys we touched here, boom, here we go. And then green bar, we bounced. So is it written in stone? No, it doesn't bounce every time, as you could see, because clearly down here, it broke way beneath down here. And it was just bad, But had you simply stayed in, and I'm just going to grab this midway. Remember, this is an ETF. That is a great move as far as an ETF is concerned. So I'm going to answer the question from yesterday's video. Are we near the bottom or did we hit the bottom? And the answer is no one really knows, because the geopolitical situation that's happening with America and Iran, something could happen. Someone fires a warning shot and the market could go deeper. But what we do learn here is here's where we can nibble. Here's where we can nibble. And so that's the point in trying to find where are buy zones and not trying to find or time the bottom. So I'm going to say that someone said, Larry, you timed the market perfectly. No, I did not. And no one can. So don't get lost. I am not that good to find the bottom. People that look for the bottom lose money. I look for buying opportunities, especially when it's ETFs where I'm going to hold long. And as a matter of fact, while I'm giving you guys a dose of reality, I want you guys to see this, okay? That is a $34,000 loss in a day. $34,000 loss in one of my portfolios, okay? And the truth be told, it dipped way beneath $1 million, okay? But then I started having these $5,000, $12,000, and here recently, now I'm back above $1 million in this portfolio. So what is that? Forget the $1 million, right? Forget that. This used to be $500, right? And then $5,000, and then $50,000, and then $500,000. It just comes from years of being disciplined and patient, looking for these buy zones and buying, and just being patient and not freaking out when the market goes down. I don't look for the bottom. I look for opportunity. Okay. And so this is how I teach. Come and join us as we are going to start a new portfolio again, or reboot this Monday, where I'm going to start to look for some positions that we could set it and forget it. Meanwhile, you can come in Money Moves. I have an entire options for beginners class there. You can come, join, earn, and learn. That will be the top link below. You can check that out. And or you can also watch yesterday's video. That will be very, very helpful for and to you. All right, we'll see you later. Live, love, laugh, and learn.